moving down to the 1,000 for day traders. What they're going to be looking at is they're going to be breaking down the time frames through the session, looking for lightning bolts, looking for turnaround stories, looking for double bottoms, anything like that on the 5-minute, 15-minute, 1-minute time frames, whatever you choose. And if they see that buying pressure coming off 1,000, that could be an opportunity for a lot of day traders. And that's really what Tesla's becoming at the moment. It's becoming an extremely good day trader stock due to the high volatility and the large moves. And for investors, they're just looking at those key big levels, the big trend line, the 900, the 1,000, and so on and so forth. So Tesla not looking negative in this market, but certainly coming back down to key zones. Now, one stock that is starting to look a little bit negative is Apple. So Apple, on many metrics, a little bit overpriced right now, maybe on the fundamental side. Some people will agree or disagree there, that's fine. We have seen some increased volatility over the last couple of sessions in terms of a little bit of weakness. We've gone on to make 3 trillion in terms of market cap and then come right back down. And that 180 just turned out to be too much for Apple. So Apple sold off from 180, but the most concerning thing is it's moved past the 20 moving average on the daily. So it's actually closed below that. And could that be a sign of further weakness here for Apple? So it's got that really sell-off kind of candle. We've got a 50 exponential underneath. We have found some buying pressure off that before, and that's around that 167. So in the next week of trade, 167 could be a key level that comes down. This zone here is where we expect some buyers to come back in, because if Apple gets underneath this area, what happens next? Double top. Where does double top go? Well, as we know with TA, we're taking the distance of this move, we're extrapolating that move out, and that pushes us back down to like those 150 areas, a much more reserved area, probably something where that key psychological number will come in as well. So for Apple traders, they're going to be looking very hard at that 167. And if it breaks under 167 and the 50 exponential, then at that stage, we're talking about a drop off down to maybe even the 150 or our very key trend line. Again, similar to Tesla, we've used this trend line now for many, many times to pick up positions. And this has been very, very good to us. So Apple is certainly not the strongest thing in the markets at this stage, but we'll have to look at the NASDAQ to get a bit of an idea of whether Apple is actually going to fall through, because remember, 167 is still very key support. Let's take a look at hyper stocks as well. A lot of people are really hammering Cathie Wood right now because her fund was one of the worst performing, or is pretty close to the worst performing for 2021. Now she's come out and basically defended her position, which I think is totally fair enough. And it's not like we're seeing outflows from her fund as much as you would expect considering the poor performance. So a lot of people still really believe. Now we're about to hit a 61.8 fib pullback of the entire movement. You'll notice here that since the pandemic, almost all of the gains, or a lot of the gains here, 61% of the gains from the bottom to the top, have actually been wiped out. And this creates opportunity in 2022. The market is down 48.49%. We've got to remember this fund holds Tesla, which isn't down, and that's the biggest position. So many of these stocks are belted anywhere between 50 to 70% or even more. And this is creating opportunity in the market. So 2022, I'm thinking a lot of people are starting to think maybe we're looking for support bases here on some of these stocks. We haven't seen it quite yet. We thought we got close to it with this base being formed around this 89 area, but it didn't quite do the double bottom that you need. And this is what you're really looking for. Just like on Barber, on any of these other stocks, we need bases to be formed. We need channels. We need lightning bolts, some form of turnaround story before you can get involved in these stocks. But RK at this stage, broken below, moving towards that 61.8, which is around that $80 to $81. And it certainly could be met over the next coming weeks. Let's move over to the indices now. Let's have a look at IWM, the Russell 2000. The Russell 2000 hit the level we thought, 226, but it was too much for it. So it hit 226, the 220s to the 226 was a pretty good trade. Congrats to anyone that took that. And now IWM is coming right back down. Now, this market should be met with support somewhere around this level. So from 216 to 210, in this area here is where people are looking for support on the Russell 2000. And a big sign, I think, in the markets that we're going into, let's say, a big crash or corrective period, and this is what we're talking about, like a 10, 15% or 20% crash, is going to be coming from the Russell 2000. This is the small cap companies. They're kind of like, if you go into the coal mine and you've always heard about the canary, this is the canary in the coal mine. And if the Russell 2000 falls underneath this kind of 210, 208 level, that's going to be when the canary is giving us the signal that we need to be concerned. And we haven't seen it yet, but certainly this will be the key zone. So we've got that 210 and even somewhere around this 215 that could be big support over the next week for the Russell 2000. Certainly something we'll be looking at in the markets. Let's move over to the NASDAQ. This one is a key support. NASDAQ has been lackluster for the last couple of months. We've seen huge rallies off this zone several times, this 15.6. We're now also near the bottom of our trend line. So if we grab the trend line over here, we'll notice that the trend line goes down to around 15,400, and this is the key level that we'll be looking at. So if the market dips down, hits this, bounces off, creates a lightning bolt, creates some kind of buying pressure, that's going to be a really positive sign that we're still in this sideways market and we're finding that buying pressure. Now, for weakness traders out there, for bears in the market, your time is coming, because guess where we're at, guys? We're really at that weekly 20 moving average. And in some ways, this is the first actual closure that we've had underneath the weekly 20 since the pandemic began. The weekly 20 has not ever closed underneath this zone. So when we're really looking at the markets here, is this showing us signs of weakness? Absolutely. Last week, we got a shooting star candle that followed through, which created that weakness down to our key buying support zone. But imagine if we have another weekly that closes like this. At the same time, the Russell 2000 is coming in and showing us that it's going under that 208, that big level there. That's going to be the canary going full tilt, saying, okay, we've got bigger correction than we thought happening for the start of 2022. So 2022 could be that real January, Feb, March weakness followed by the strength. That's the type of stats that we want to be bringing together with our analysis. So here is a key level of support. We need that trend line to hold. We need everything about this to hold if you're bullish on the markets right now, because it's a big deal how many times this has been met by support, and it's held up since the beginning of course, the recovery in the NASDAQ. So really, it's coming down to this, and this is going to be a very important zone. Same thing goes for the S&P 500, and we take a look at that on the weekly. You'll notice it's not as dire yet, but we do have these big trend lines coming in, and we have this point here, which is the S&P 500 weekly. If the market comes down to this zone and it closes below this zone, what's next in store? We'd have to think at that stage, boom, boom, all the way to the 50 exponential. And that's going to be a pretty big drop. So let's talk about what that is from top to bottom. So from top to bottom, that would give us around a 10.53% return in terms of down. That's the type of thing that many people will be looking at in a corrective period, but you won't get that signal until it gets underneath, and it must close underneath the weekly 20. This is the strongest signal in the market. So things like the NASDAQ seasonality weakness in February and January into that March period, okay, that's one thing. The Russell 2000, the big support, the canary for sure. The S&P 500 underneath the weekly 20, a huge deal for traders out there, huge deal for Wall Street and investors alike. So this will be one of the biggest points that we're watching in 2022, that one right there. And what it's showing us right now is it's, again, not really giving us the signs of full weakness just yet. It could be met by buyer support almost straight away next week. And the reasons why is because we have this long leg doji here. So if we zoom in on this and we bring that up, this is our sign of indecision. This is the major market here. Low, high, open, close. Basically, the market's saying, I don't really know whether I should be buying or selling right here. Did we close underneath the low? No. So we didn't find enough weakness on the Friday session to get us below that number. If we close this week above here, is that going to be a good sign? Absolutely. We expect further bullishness. Now, if we close below here, where do we expect to go? To the trend line, to possibly even the weekly 20. So the trend line and the weekly 20 could be met somewhere around here. So I think that's going to be a big thing when we're looking at this week. Where was the low for this session? Where was the high? Did we close above or below? Have we made a decision from the indecisive point, from the point where there should be buyers, but they're not showing themselves just yet? So remember, watch those types of things in the market. We've got the NASDAQ kind of finding support or very close to support right now. We've got the S&P 500 indecisive, and we've got the Russell showing us that it's very close to the key supports. So we've got supports starting to come in here across the board in 2022. And if they are broken, that's when we start talking about correction, or some people will call it crash. But we're very, very close to those levels. So the buyers should come in very, very soon in these markets. Now, another market that people are getting concerned about is, of course, the crypto market, and fair enough. We'll start off here with the Ethereum market. So the Ethereum market, we've got a weekly here. We've just tapped one of the key zones, close to that weekly 50. Now, that's where the last drop off, or at least the first drop off here, was met by buyer demand. And we've just tapped in at a very large percentage discount, because basically the market fell off around 40% from top to bottom on Ethereum, and even more on many cryptos. So it's come down to a point you would think is going to find support buying. And why? It's $3,000. It's a massive psychological here for Ethereum. So this is where we hope Ethereum starts to find buying pressure. And we're going to have some key issues and problems coming up now. We're going to have 3,600 being a key level of resistance, because we have resistance, support. What's going to happen if the recovery does happen here? It's going to hit this level, and you would think sellers will come back into the markets. So at this stage, we're looking for lightning bolts. We're looking for double bottom style patterns. We're looking for channels, or we're looking for some kind of accumulation. We haven't quite seen them occur just yet on Ethereum, but it is at that big buying pressure that you would hope will hold. Bitcoin is kind of similar. It's coming down to the 40,000 bracket, or the area there. Previous resistances, previous supports, finding support again. It is critical the Bitcoins holds this zone. If it doesn't, where's the next logical answer for it? All the way back down to 30,000. And I'm sure many of you will not want it down at that point, because that's starting to say, well, are we ever going to go bullish again? We're starting to drop some pretty significant numbers here. 40% from top to bottom down. That's a big number. When we're talking about Bitcoin, what are we looking for? Some form of signal towards the bull side. And we do have some interesting stuff here. On the daily, buying pressure, 48. Buying pressure, the 40,800. Long leg doji, again, indecision. Low, high, open, close, indecision. Do we see decision made and some bullish action? 46,000 now, a huge level, just like Ethereum at 3,600. This level here, if we're met, which most likely I believe there will be a rally to this point. That's my personal opinion. And the only reason why is because it makes full on technical sense. If we rally up to here, then we at least get the chance to find out who's winning between the bulls and the bears. Are the bulls winning? Are the bears winning? We'll find out at somewhere around this zone. So this 46,000 seems quite probable, but we haven't got quite enough support just found yet. We've got nice base formation. As we break down the time frames from the 4 hour into the 2 hour, some people will be starting to say, well, what about, do we have a little bit of a double bottom starting to appear here? Is 43,000 kind of like that signal that we're moving to 46? It could well be. Nice base accumulation there. And there are also a lot of people going with this idea that we're in a massive head and shoulders towards the negative side. So what they're saying left shoulder, head, right shoulder. So here's the left shoulder, here's the head, here's the right shoulder. And even if we do rally up to 46, that'll be an important area, because imagine if we break underneath this zone here. All of a sudden you're talking about a head and shoulders. We're taking this distance here and people extrapolating that out to bring us back down to $10,000 or $11,000. Now, I don't think it's going to happen, but that's what a lot of the doomsday preppers for crypto are going to start saying. There's a head and shoulders there. Once we see a break under that 40,000 level, we're going to be in this. 30,000, yes, okay, there might be buyers, but realistically, this is the decline after those huge rallies. Is it like 2017 into 2018 again? Hopefully not. I don't think so just yet, but this is a very critical point. I think a lot of you guys can see why. For the week ahead, we've got some news coming out. Let's have a look here. And what we're going to be wanting to do is basically get a bit of an idea of whether there's big red news. And one of the ways you can do that is you can